Hey, what's up, man? What's up, my friend? Yeah, let me dive into the topic of today. you know, the guy is a guy who asked me a question. Not really like he asked me a question, but the guy complained a little bit that he cannot even make profit with the moving average. So I think a lot of people might not even understand how to be profitable with moving average. Well, there are different kind of moving average, and I've been using moving average since I've been trading. So I think I want to correct the guy based on how he complained to me that he doesn't know how to use moving average and he's not been profitable with them. Okay, let me explain to you everything. The point is, when do you actually buy? That is the point we want to talk about here. Okay, so this is exactly where Bollinger Band comes in. Okay, this is exactly where Bollinger Band comes in. Okay, so how do we now make use of this Bollinger Band? Okay, I'm using this Bollinger Band period 20. Okay, so even if I miss this crossover of this period 20 crossing the 200, then I don't need to go and sleep. I don't need to hit my head on the wall that hey, I missed my crossover. No, I don't need to do those things. Okay, this is the reason why this Bollinger Band is on my chart here. Okay, now let me tell you something. You see, when you're looking at the middle band of this Bollinger Band period 20, okay, you will understand that when price, which is this candlesticks now, oscillates around it, separates from it, and comes back below it, below this central band of this Bollinger Band. This is the central band I'm touching here. When the price comes below it this way, when the candlesticks comes below it this way, this is your entry, because you want to buy above the moving average 200. So when this Bollinger Band is also above the 200, then we are up, we should be buying. So you buy when the price comes below the middle band of this Bollinger Band. This is where you buy, and now you buy. Okay, then look at what happens. The price shoot up, okay, shoot up, and still came down below the band. Okay, this is another buying opportunity. Okay, some of you might say, hey, okay, I bought here, but now look at what happened. It's coming against me. Okay, it's not coming against you. It's not coming against you. Okay, because if you understand that whenever we are above the moving average 200, we should be buying, and we should be up. Okay, and then what is the characteristics of being above the moving average 200? So definitely we should be breaking the top. Okay, we should be breaking the top. Look at one top here, broken here. This is another top. Okay, broke it here. This is another top. It's set, and now something is gonna happen here where we're gonna pull over and break all this top. All right, now let me tell you something. When this candlesticks is oscillating around or relating with the central band of this Bollinger Band 20, this is another opportunity to buy into this market. Okay, because what it's talking about is that we're gonna break this top here. We're gonna break it. We are gonna break it, and see, we broke it. Price went and came down to relate with this same middle Bollinger Band. Okay, and you will see what happened later, that the price will shoot up and separate from this middle Bollinger Band. So what is the point here, and how to be profitable with all this kind of stuff? Okay, how to be profitable is that, you see, you know what is going on, that actually we are above the 200 and we are up, we should be buying, right? You know, we should be breaking the tops. All right, good. And you know that this kind of movement might continue for a long period of time. Okay, so what you want to do is that you understand the fact that whenever there's going to be a major retracement, okay, that major retracement will end by touching the moving average 200. That is the major retracement. That is the major retracement. But it doesn't happen all the time. Okay, it only happens when the trend is about to end, because when Bollinger Band pull back and come touch this 200, definitely it's gonna reverse. That is a sign that for touching the moving average 200, definitely the trend is about to end. And what happens next is that we should be expecting another crossover, forever touching it once. So that doesn't happen immediately. Okay, it happens over a long period of time. It doesn't happen immediately. Okay, so in order not to be afraid or panic, okay, with this kind of moves, okay, you want to make sure that your stop loss is below the moving average 200, because eventually the moving average 200 will climb and, you know, get you into profit. So definitely another point is that you should not trade a big lot. Okay, you are not supposed to trade a big lot size. Okay, you have to know how to split your trade into pieces. Let's say today you want to trade like maybe 5 lots. Maybe you're the type who take like maybe 2 lots in a day. So the 2 lots, you don't want to take 2 lots at a time. Maybe you want to split it like 0.50, and you take only 4. 1, 2, 3, 4. 0.50, 0.50, 0.50, 0.50. That's 2 lots. But you just split them at different entry points. Okay, different entry points. When the price is coming below this central band of Bollinger Band, you pick them up there. You pick them there, because you're going to be profitable. And that is how to be profitable with the moving average. Okay, especially when you're using a long-term moving average like moving average 200. If you the type using that moving average 9 causing the moving average 20, okay, that's still for the short-term trades. Okay, and that has its own disadvantage also. But the moving average 200 help to protect your stop loss also. Okay, but the main secret behind it is that you don't need to trade like a big lot size. So the second point is that when you're looking at my chart, okay, and I'm looking at the fact that I am up with the price is above this moving average 200, so I know that, okay, and for the price to cross my moving average 900, I think the bigger chart is they are changing to up trend. Okay, the trend is changing to up. So how do I know all this? Okay, this is the reason why this moving average happens to be on my chart. Okay, when my price here cross the moving average 100, I understand the fact that, okay, 30 minutes chart has changed. When it's crossing this 200, I know that, okay, 1 hour chart is changing. And when it crosses this 900, I know that, okay, 4 hours chart and daily, they are preparing to make a change. Okay, but If you are confused about this, because this took me a long time to understand also, look at what I'm touching here. This is CCI, okay? This is CCI, and this CCI, look at, it's set to be like CCI 200, okay? We have this kind of things also like MACD, okay? MACD all depend on the settings, okay? But this setting you see here is CCI 200 period, okay, based on this 200 period moving average. When you see this CCI above this zero, it's telling you what? That we, or the price, is above this 200 moving average. And look at here, when this CCI is below this zero, it's telling us that the price has crossed below this 200. So I'm not the type of trader who split chart on my screen, because I cannot even see the things I'm trading. When I split the chart, I can't even see those. I can't see properly those things. When I split 15-minute chart, 30-minute chart, 1 hour chart, 4 hour chart, daily chart, then I'm having like 6 pieces of chart on my screen. I'm not that kind of traders who do that. This is the reason why I put all this moving average on my chart, in order to guide me through, because I have to know what is going on around the bigger chart, okay? So with all these things on my chart now, let me know that the bigger chart are changing. They are changing to uptrend, okay? You want to use things like CCI alongside with it. If you cannot read the moving average by itself, then you need something like MACD or CCI, okay? To me, look at, if I take CCI down now, without CCI, I still know how to be profitable with these moving averages, because it's been a long time I've been using them, okay? This moving average in conjunction with this Bollinger Band. So this is not too difficult for you to find, okay? Entry. To me, when I take a look at CCI, where is my entry on this CCI? Okay, this is my first entry. Okay, I understand that CCI is above zero, so definitely I should be buying into the market. So where will I buy? Buy the dip. This is the dip. This is one dip. This is the dip. This is the time to buy, because when you see the dip, the price will rise again. So you want to be there before the price ever rise. This is another one here when it's just starting, okay? But I don't want to talk too much about this, but this is why I base your concentration on this Bollinger Band, that even if you miss your entry, your crossover, but look at, what about this Bollinger Band? When price, this candlesticks comes below the central band of Bollinger Band, these are your entry. But you need to know what is going on the bigger trend. You need to know the trend direction. Look at, let me show you something that is also showing me the trend direction, okay? Look at this, okay? Because from this point here, I can see the bigger chart, what is going on with the bigger chart. Daily is up, 4 hours up, 60 minutes it's up. The smaller one, 30 minutes, 15, they are up. Only 5 minutes is retracing. This is a retracement. And what is coming into my mind, that 5 minutes is retracing, that is telling me that my entry to buy into the market is coming again. If I don't use this also, I still know how to get the entry. And this is only one point of how you can be profitable with the moving averages, okay, in conjunction with the Bollinger Band, okay. Price have crossed the moving average 200 and price have gone. So that means what? Because I understand the feeling of the guy who said he's not making profit. Because I understand that, okay, he followed the moving average crossover, and that is the only one trade he picked up. So that is the reason why a lot of people say we are making profit with this moving average crossover. But still, when you understand properly what is going on around the moving average, then you will know how to be profitable. Like, to make it simple, I have to put the Bollinger Band because of this video, okay, because without Bollinger Band I still know what I'm looking for. Look at, when this candlestick comes below the central band of this Bollinger Band, this is your entry to buy into this market. Because why should you buy? Because you are above the 200. That is why you should think of buy when the price comes below the central band of Bollinger Band. Anyway, I think this information is cool and it's okay for you guys, and I hope you're gonna learn from this, because I know that some people have this problem. Not only the guy who's complaining, I know a lot of people having this problem, and this the problem I had a long time ago also, you know. But you know, when we find a way to solve our problems, I think that is the best thing we can do for ourselves. So thank you for watching, and you understand, thank you for watching. I hope you learn a lot from this. Bye bye until I make my next video. Thank you.
Yeah, man. It's happening again, man. This is a trade we just put in today, man. Today. Happening seriously here, because I'm trying to show you the power of what is possible. Yeah. Distance fluctuating from 17 to 2000. And I think at the end of this, I'm getting this to 10,000. Within the week, I'm getting this to 10,000. If I'm not gonna over exaggerate, let me even say $5,000, man. But I tell you, I'm taking this to $10,000 within the week. You know, I know most of you that I gave signal, maybe your TP level is hit for TP1. You got TP2 gold to hold your trades. Okay. You see what we're making now? This is what we're making now, and this results coming from the power of patience and the ability to hold the market. You understand what I'm talking about? See? You know, this is the same account we always use every time. I think we got the lot size here. It's still the same, 100, as you can see. And that's me. It's live, man. It's not a fake thing. I don't want to say something that people would think is fake. You know, I always like to show this thing. I always like to show this thing that people can see it. Okay, it's real. It's the same account. It's real. Right? You know, convincing enough. And for me, showing this is that I don't like doing some fake things. Okay, I don't like doing things. You know, maybe it's not possible. I cannot do things. You know, I'm just, when you know about something, it's going to be possible. You know, because I said in my last video, I said the only thing that's going to make you never to be able to generate any result in whatever you do is when you exercise fear. Fear is the only thing you will exercise that will never make you able to generate a result in anything, and that same fear is the one that will make you be feeling like some things are not even possible. Let me show you something. Hey, see, I hope you see the lot size. You see the lot size right here. I don't know where I'm touching now. Here it's 100 lot. Here 100 lot. You see, who is that human being that is not even professional or that doesn't trust himself that will now go put in 100 lot 2 times inside this thing? Nobody is going to do that. But I think it's only me who is doing that, man. Why? Because I know where this market is going and where it's going to end. Before this market ever made a move, I know where it's going. Before this market is going to end, I know where it's going to end up, man. I believe in this, what somebody is making within maybe 6 hours now. I think it's 5 hours if I'm going to count the time. 5 hours, man. Anybody in any factory or any industry now is not making this in 5 hours, man. And this will go back to $2,000. And this, I will come out with $10,000 on these trades alone. These trades alone will give me $10,000. You see? I'm still calling the amount it will give me to show you that, man. I've been trading these things for a long time. If I put only one of this thing, I put only one of this lot, I know how much I'm going to get out with. Only one of it alone, if it's well managed, can give me like $4,000 in, let's say, 5 days. Yes, only one. Then here we're talking about 3. And this I'm going to hold for 3 days or 4 days for real. Depends on how the market goes. But $10,000 is sure. So this is your boy signing out, just showing you guys the power of what is possible. No need to exercise fear. Get your signal, pick your trades, and follow me the way I move. Signing off.
Your trend line, and analyze the market. But first of all, look at this naked chart. You got a full idea that the market is going up, right? I'm going to put a trend line. Okay, I'm going to put a trend line. Okay, but this is going to be a very simple way of drawing a trend line. Have you seen it? All right. What does this implies? Implies that if we're going to take this buy, then we wait for the price to come and bounce somewhere on this trend line before we take a buy. This is trend line analysis. Okay. Now, that is the first step. That is the easiest way of drawing a trend line. The second step is, let us go and take a look at the support or resistance, which I always talk about. If you didn't get it, the link is going to be under this video. It's very important. We say, okay, let's try that support resistance 500 first of all. We put it on the chart. Okay, this is what we got. From the base of the trend line, you see, to the high. That is your 500. Now, what do we want to do? Let's draw another trend line. Let's draw another trend line on this support. And then another line on the resistance itself. Okay. Now we got the high and the low of the chart. The high and the low, because this is going up. Okay. And now what we're going to do now is that we're going to go again to say, okay, I want to go and remove that
support resistance line. I want to delete it. Okay, I delete it, but it's not yet deleted. But I want to insert another trend and another support resistance of, let's say, in this case, 100. We have it. Okay, the 100 is showing us something from this high to this low. Okay, but let's go again and make it like let's go edit it and make it like 200. Support resistance, let's say it is 200. Okay, this is 200. We have 500. We have our trend line. We have 200. Okay, we have 500 support resistance, which is this, and we have 200. What does this mean? This means that we got a touch on the 200 low, then we got a touch on the 200 high, then we are expecting a touch on the 200 low to create a new 200 low, which means I'm gonna go again to put a line on the 200 low to say what? Let me make this line a red line to say that, okay, let me make it a yellow line to say that, yep, if the price get there, let me say I want to target a buy. I want to target a buy. It's a buy zone. You know, I target a buy zone. So definitely what? Because I know the trend is going up. With the 500 support resistance line I put here, with my trend line going up, then with the support resistance 200 itself, which shows when the price comes to bounce on this 200 yellow line, that is when I look to buy. This is it.
In today's video, I want to share with you how do you identify trend reversals. Specifically, I want to give you 2 strategies to identify trend change before they happen. I want to show you some telltale signs or how do you use certain tools to determine if a trend is going to change or not. Now, you should be excited because in today's video, I'm going to reveal certain secrets that cost us a lot of money to learn. Okay, we went for other classes, we learned from other gurus, other educators to learn this theory, okay, and how you can actually use this Dow theory to identify trend change. So this is what I'll be covering in today's video. The first thing I want to do is I want to convince you as to why you need to learn trend reversals, even if you are not trading counter trend. Okay, a lot of our videos, we do not advise you to trade counter trend, but this does not mean that you don't need to learn how to identify trend reversals. It's still important. So I want to start off this video by convincing you that you still need to know this. Then after that, I want to go into the 2 strategies. Okay, strategy number 1 will be how do you use the break of structure. Basically, you are looking at the market structure to identify if a trend change is in play. Then the second strategy, which is something that is very unique. Chances are you won't find it anywhere on YouTube. Okay, it's not something that we rip off from someone. It's something that we paid good money to learn. And in today's video, we are making it available for you for free. Okay, we're not charging you anything to teach you this. So really hope. Now, this is an uptrend. So when does the uptrend stops, or when is there a telltale sign that the trend is about to reverse and we are no longer in an uptrend? Very simple. When price breaks this higher low. So price makes a lower low instead of a higher low. Instead of doing this, it comes lower. Okay, so if it makes a lower low, this is the first telltale sign that the structure or market structure has been broken and we are now in a downtrend. Of course, this sometimes what will happen is that price might come here and then it comes back up and it starts resuming its uptrend like that. But in most cases, if it make a lower low and you see that it comes up and it goes back down, you see that it comes up and it goes back down and it breaks this again, then you're down, and it breaks this again, then you're downtrend. Of course, the opposite is true. I'll just run trend. Of course, the opposite is true. I'll just run it through quickly. Let's say you are in a downtrend, and this is a low, this is a lower low, this is a high, this is a lower high, and instead of price making a lower low and lower high, it comes up like that, and it makes a higher high. Then this is the first telltale sign that it's about to reverse. And if it comes back down, what you can also see is that it's kind of like a head and shoulder. If it drops further, then it could be a potential double bottom. But this is the first telltale sign. And of course, if price goes back up, and this becomes a high, and this becomes a low, and this is a higher high, then you are officially in a uptrend. So let me show you a chart just to illustrate this. So right here we have a high. Okay, just exactly like how I drew it just now. It's just the same thing, just that this is in the charts. This is a high, this is a low, this is a higher high, and this is a higher low. And this is a higher low, sorry, let me just write it properly. Watch this low over here. This low is actually lower than this. So you can see that this is a telltale sign that the trend has changed. In fact, if you see this and you look left, this is kind of like a left shoulder, this is a head, and this is a right shoulder. It's kind of like a head and shoulder pattern, which is a reversal chart pattern. So this is a telltale sign that the market is going to reverse. The trend is about to change. And in this case, price carries on to break this low. And what you have is it becomes a low here. This is a high, and this is a lower low. So this is how you identify a possible trend change, okay, at 6% of the primary price change since the previous medium swing or start of the main movement. Okay, so the key is 33% to 66%. This is the key. So let me show you how do you use it, okay? I want to give you the instructions first, the step-by-step guide first, then I will switch to the chart to show you how I use it in real time. Okay, step number one is that you want to use the Fibonacci region. So this is TradingView over here, okay? It's a free platform. You don't have to use TradingView, you can use any platform, but in this case, I just want to use the TradingView because it's the fastest, okay? So the first thing you want to do is you want to pull out the So if you were to draw it, you can see that there are many levels. For the purpose of this video and how to use Dow theory, you just want to be focusing on the 0.618. But in this case, I'll just leave the other values on. So what you want to do is you want to find the recent swing. We are in the uptrend. So you can see this is a swing high. This is a swing low, swing high, higher high, higher low, so on and so forth. Okay. So we are in the uptrend. So has this uptrend been, is there a sign that euro-dollar is about to reverse? Let's draw the Fibonacci tool. So as I mentioned, you take the recent swing point. You can take here to here, drag it up. Okay, let me just zoom in. And yes, you can see that the 0.618 level, which is over here, has been broken into history. But in the end, it went back above. So you can see that this is not entirely foolproof, but it's a good gauge to tell you if the trend is, let me just get it right. You can see this 0.618. Number one, let's say you enter a trade somewhere here and you're in profit and you want to know when to exit. You could have exited somewhere here when you saw that the 0.618 level is broken. Okay, the golden ratio is broken, then you can exit. Okay, that is one way you can manage your trade. You can use it as a trade management tool. The other way is that, let's say you were thinking of buying, but you see that this level is broken. Then you might want to lean towards the reversal side where you're actually looking for a sell instead of a buy. So this is a very powerful tool. There are really many users you can do, ways you can use it. Depends how you want to use it. But the way I like to use it is just to tell me if this trend is healthy. Should I be buying with the trend trade, or should I be looking for a reversal? So in this case, I'll definitely be looking for a reversal to the downside because the 0.618 golden ratio has been broken. This is a swing low and this is a swing high. Okay, what you want to do is you just want to switch to the line chart. Take the levels. Okay, just map it something like that. Okay, map it something like that. Change back to the line chart and you can see, okay, so this is the low and this is the high, and then you draw it like this. So this is how you can use the Dow theory. Okay, it's a very powerful concept that no one teaches. Okay, it's something that costs us a lot of money, but I really hope you appreciate it, you really apply it, because there's no point in watching this video, us giving you all this value if you do not apply it. Okay, so if you have any questions, just let us today's video and then I'll just end off. Okay, so in today's video, I shared with you why you need to learn trend reversals, even if you do not intend to trade counter trend, because when you are trying to trade, you are trying to time your entries. Let's say you are trying to trade with the trend and there's a retracement. You are trying to wait for the counter trend retracement to resume back into its trend. So you're still waiting for a trend reversal in that sense. Then I share with you the strategy number one, which is a break of structure. If price is in the uptrend,
You know, the trade I took yesterday, you know, trying to show you this trade I've been holding for like let me say let me say 10 hours, 10 solid hours, okay? 10 hours, okay? Like I said, that I trade the market direction. Look at, I don't care if it fluctuates or not. You understand? But this is a proof, because I always love to show proof of what I do and how I do it. Most especially, I believe that my result really is worth showing people. You know, this is the reason why I show my result out. At least you all can see it is live account. There's nothing hiding here. It's live account, you know. All right. So what I'm saying here is, you see the lot size, that I'm not even a trader that is scared of what I'm doing. On Friday, the market along the trend might make the biggest move. Okay, so that's where we could be expecting like maybe 1,000 or 2,000 or 3,000. But all I'm showing you is, look at something that is real in front of you right here. You see it's real. Okay, because a lot of people, when they see that they cannot do something, they say it's fake. 11 years of trading Forex experience is what I'm showing you now. Look, I've done this thing for 11 solid years. This is what I'm making now. I just woke up. I'm not even thinking of going to one factory to go and bother my head, to go and sit under one boss. Even the boss you're talking about has not started making this in the morning. I just woke up. It's just early morning now. I just woke up. This is what I'm making now in just one day. Okay, this is the power of you knowing what you're doing and the power of freedom. You are the only one that can bring freedom to your life. When we tell some people to go and learn, they will never. But when I tell people, hey, come and liberate your life, they don't want to pay money. They want everything given to them for free. When you see a good result in front of you and you want it given to you for free, you know what I'm talking about. And I'm not the Forex trader that always make noise out there, man. And if you remember, man, the way I put one of my videos that look at me, that I turned $700 into $7,000 in one day. That is the first thing ever I did in my life in Forex, to turn $700 to $7,000 in one day. And the strategy I use is still the same strategy. I've done that a lot of times. And I've turned $7,000 to $22,000. The $7,000 I turned to the $700 I turned to $7,000 in one day. For you to know what you're doing and how success of Forex is inside the power of repetition. Thank you so much. And patience. You don't have patience, you cannot trade Forex. Thank you.
Hey, what's going on, man? What's going on with you, man? Today, I want to talk about Bollinger Bands. Like I promised to make this type of video talking about Bollinger Band and why I use it on my trading chart. Okay? But before then, I think we have to talk a little bit summary about everything we have talked about the moving average 200. Okay? When you take a look at the price, you see that the price separate from the moving average 200 and later we come back to the moving average 200. Okay, when you're using the 15-minute chart or 30-minute chart, okay, the price separates from the moving average 200 but must surely come back to the moving average 200. Okay, look at the price touch the moving average 200. Okay, this is where the price will always start. It starts from the moving average 200. Okay, either by crossing it, okay, or coming back to touch it, then proceed to the real direction of the bigger time frame. Okay, now look at this place. This is a 30-minute chart time frame. Okay, and you have seen that the price separates from the moving average 200 period and still came back to it. Okay, this is the characteristic of the price when you're talking about the moving average 200. All right, so now let's talk of one thing, one problem that I noticed with the moving average. Okay, when you're using the moving average, okay, you only see the price separating from it, and you know that price is gonna come back to that moving average 200, but at a point you don't know what the price is doing. Okay, you don't know if it is the right time it's coming back, or maybe it's just fluctuating to proceed to the real trend direction. But now this is the main reason why Bollinger Band is so important. All right, let's say you take a look at this place. Okay, take a look at this place, this flat. I'm touching this flat. Okay, the price touching the top band of this Bollinger Band. Okay, touching the top band, upper band of this Bollinger Band. Okay, and you know one characteristic of Bollinger Band is that when the price is touching the upper band, it's gonna go back to touch the lower band. All right, it's gonna go back touching the lower band. Look at what it does here, touching the lower band. Okay, touching the lower band, it has to go up touching the upper band. All right, later touching the lower band. Okay, good. This is not what I want to say. All right, this is not what I want to say. When you use this Bollinger Band with this moving average period 200, okay, how do you know that this price is coming back to the moving average period 200? All right, when you are on the 30-minute chart and you see this Bollinger Band period 20 and price is touching the top of it, just like this, okay, and you see the price breaking the middle band of Bollinger Band, definitely you have to get one thing inside your mind, that definitely the price is making attempt to go back to the moving average period 200. That is how you know that. And this is why Bollinger Band is so important. Okay, because it provides something like a guidance, guiding you to make you see clearly what the price is about to do. Example, if I remove Bollinger Band right now, okay, and the price jump from this moving average period 200 and now it's flat here, okay, and now it got here, I think you're gonna be confused when you see this kind of moves. You would think, okay, moving average 200 is in up direction, okay, the price is going up direction right from here with this white candlesticks, so definitely you're gonna be confused and jump into this trade. But now this is where it goes against you. All right, bear in mind the price must surely come back to this moving average period 200. Okay, for you to be able to avoid this kind of false moves, this is false movement of the price, a false movement of the price. When I bring back my Bollinger Band, let me bring back my Bollinger Band. All right, my Bollinger Band. Now when I apply Bollinger Band, what do you see from here when the price is touching the top, the upper band of Bollinger Band? Okay, it's touching the upper band of Bollinger Band, and it went straight back to touch, to visit the moving average period 200. And now if the bigger chart is up for real, this is where you have to buy, because on the smaller chart, like 30-minute time frame, okay, the price have returned to the moving average 200, giving you a good entry point, the cheapest price ever that you can buy if you really want to buy, in order not to get confused. Now what is going on with this Bollinger Band? Okay, you see, I love to combine, if you can see my chart now, 30-minute time frame, which is the smaller chart frame or time frame, and the 4 hours time frame, which is the bigger chart, which I'm using. Okay, so when you take a look at Bollinger Band on the 4-hour time frame, okay, there's one characteristics of the 4-hour chart which I love so much. Okay, the 4-hour chart, I love it so much based on just one simple characteristics. Now let me tell you, before we go to the 4-hour chart, when you apply this Bollinger Band period 20 on the 4-hour time frame, okay, that is the trend, that is where the price is going. The price is moving up right now, so we are above the middle band of Bollinger Band. Okay, but when we say okay, some people will get confused, they start selling against the market right here. This is a false breakout. Definitely when you look at 30 minutes chart, this is when the price visit the moving average period 200. See what is going on right here. Whenever on the 4-hour time frame the price, which is the candlesticks, bounce on the middle band of the Bollinger Band period 20, definitely when you look at the 30-minute chart, the price is touching or resting on the moving average period 200. And if the 4-hour chart we are above the middle band, then I think you got to go buy. Look at what happened here too. Look at what happened here, touching the middle band and reversing to the original trend. Look at what is going on here. This is touching the middle band of Bollinger Band. All right, it's touching it. Okay, so for touching it, 30 minutes chart is paying a visit to the moving average period 200. This is another buying entry because the trend is up. Go to the 30 minutes chart and see what is going on. See, the price is resting on the moving average 200, giving people another opportunity to buy into this market. 4 hours chart. Look at the qualities and characteristics of a 4-hour chart. You see with the Bollinger Band period 20. Okay, when the price bounce on that middle band of Bollinger Band period 20, the price will shoot to the original direction the next moment. See what happened here. After the price touch the middle band of Bollinger Band period 20, the price shoot back and return to the original trend. Have you seen? Look at touching the middle band, shooting to the original trend. Good. Look at this green. This green. What does it do? We apply the moving average period 9 onto this chart to represent the price. The moving average period 9 with this Bollinger Band, middle band of Bollinger Band period 20, when they cross each other, that is when the trend is changing. Look at when the candlestick bounce on the middle band of Bollinger Band, breaking it with this tail, but the moving average period 9 did not cross. So you don't need to get confused. The trend is still up because our period 9 moving average is still above the middle band of Bollinger Band on the 4-hour time frame. Look at, we are up. All this is up. Look at what is going on here. What is going on here? The moving average period 9 is still above the middle band of Bollinger Band period 20. So definitely, what is this telling you? We are still up. So I think this is just a little kind of, a lesson for you, little tips. And I think if you enjoy this lesson, if this does you a little bit of good and you got a little bit of idea from this, I think you should like, share and subscribe to this channel. Thank you very much, and wait for my next video. Thank you and bye bye. Yeah, what's up? This is your main man from the Forex Strategy Factory, bringing it to you again the way I used to do. My video now is based on answering some questions of some of my followers. You push the notification bell so you'll be notified whenever I make a video. You'll be the first person to come and watch. Now, this video is based on what someone asked me a few days ago. Buy sell happening now. For you to make the bucks on a daily basis, this buy sell is what you want to focus, regardless of the movement of, let's do something here. Look,